Welcome. I am Eric with Mother.com, and I greet you, beloveds, in the love and in the light of the one infinite creator, with about 1 hour to go before the end of the session for this Friday's market trading. Let's take a look at how markets are trading, and in this video we're going to take a look, of course, at the general market, and we'll take a look at Bitcoin and possibly also take a look at Ethereum. They are up nicely, about 10% for the day. All right, let's begin by taking a look at the weekly charts, where I believe, as I have discussed with you guys, paid clients, that is, over the last 2 weeks, if not 3 weeks, I've been talking about the weekly charts and the need to follow them because they were coming to an area of potential support. We got that support last week, and guess what? We are seeing a follow-through week. So in other words, this line that has been guidance is yet again guidance. We can see on this Dow chart, the last bounce, or the last couple of bounces in the market have come in this area. One coming in late 2020, early October, late November of 2020. We came close here, again, late November, early December of 2021. And now we've tagged it perfectly, and we are looking to close higher for the week. And keep in mind where the RSI is trading, around that threshold of RSI 50, moving above it does mean that more than likely, if we stay above 50, we're going to close towards the highs of this week's action. Now, this is an area to watch, that RSI 50 line, because it could turn into, again, another area for the market to struggle a little bit. Or if the market can continue with the recent support, we are looking at a possibility of the market eventually moving higher. And believe it or not, if this line holds, if this line can hold, then there's a likelihood back on the table that we might have to test recent highs, if not improve on it. Yes, you heard me correctly. If this line continues holding on the Dow weekly, which is consistent with the S&P 500 and the Nasdaq, by the way, then now we are back with the possibility of a new base and a future breakout now being set, as long as the Dow can hold above the blue line, the black line, and can also hold and keep its RSI above 50. Those are the requirements. Now, while I'm on this chart, I would like to discuss something that I just noticed just now while I was recording this, or as I am recording this. It is this line. Let me change colors here, as we continue our best always to try and figure out what this dance is doing. There's now, the Dow is going to have to contend with this back test line going into the new week. This line is where we see a recent break and a move below RSI 50. And now, depending on where we close, I believe we are going to close around this line above RSI 50 for the week. And now we are going to also, as we go into the new week, look at the possibility of rejection at the underside of that blue line, suggesting after 2 weeks down, we might actually be setting the stage for move down. Keep in mind, if we close above RSI 50, let's say we close above 50, which looks like likely this Friday with about 1 hour to go. If we close above 50 on the weekly and we break it in the new week, or whenever we break it, expect a big down week. This is the Dow weekly. And if you take a look at the Nasdaq weekly, we can see that the line that I have been suggesting has come into play. By the way, this line also, remember, happened to be around that 38.2 threshold on its RSI. So as long as we are above this line, this is still a market that could stabilize and in good time eventually work its way higher. Now, I would also be looking at the recent weekly closing low for 2022, because if we break the weekly closing low for 2022, that might suggest a fresh break after 2 weeks of rest, might suggest that we would also be looking to break this trend line or the uniformity line. It's important to understand that this trend line is what brought us off the lows of early 2020. And we've come back and tested it nicely. Indication is prices are poised to go higher unless, as I said, we stall here in the new week, break the weekly closing low from 2022 and break this line. That would set the stage for a continuation of the recent move off the highs. S&P 500 weekly, again, just like the Nasdaq, so we can save some time here. Don't have to go up over the same points, but we can see also where we are closing. We are closing above 50, which means we're going to close towards the highs of this week's range. And so for next week, we are also going to be on the lookout for a potential reversal back below 50. For now, systems are suggesting that this market is stabilizing, and as I said, based on the Nasdaq analysis, similar to what the S&P 500 is presenting us here, the likelihood of moving to fresh all-time highs, the likelihood of a breakout is now back on the table as long as S&P 500 keeps its RSI above 50. The likelihood of moving to fresh all-time highs is now back on the table. Another aspect of this market that we should completely understand is now that we are showing stability and the monthly chart. So this is the monthly chart for the S&P 500. It is positive, and as long as the S&P 500, the Dow are positive, the Nasdaq might eventually be positive. As long as the monthly charts are positive, please understand that the momentum is now shifting back to a bullish uptrend. Now, if it turns back to be negative for the month, then there's no monthly push, or there's no influence from the monthly chart pushing things higher. So if we turn negative again, back to a negative monthly move, then the pressure continues downwards. So another aspect of this market is we are very close to that RSI 69.1. So we also need to understand if the market can just keep moving higher. If it recaptures that 69.1 level, then we are back to a very bullish market. And I think that's a biggie. A big takeaway in this market is S&P 500 could very easily move back above threshold of 69.1. The Dow, and that's what I was waiting for before I sent that breakout alert list, was for both at least. So what I was doing is I was waiting before sending that list. That list has been ready for almost a week. But anyway, what I'm saying here is between the Nasdaq, the Dow, and the S&P 500, I was needing at least two of them to be positive for the month, so that at least I can know that I'm not jumping the gun and that the market itself is showing signs of stability. So again, as long as the Dow is positive for the month, which it is right now, albeit slightly, we can anticipate a market that is stabilizing and might eventually test recent highs, if not improve on them, especially as far as the monthly chart is concerned on a closing basis. So as long as the Dow is positive, we have to respect the possibility for upside move. Eventually, if the Dow was to roll over and turn back to be negative, then we can say that the momentum is still biased to the downside. As of right now, if I take a look at the Nasdaq, and again, we're seeing here as we come close to the end of the day's action, end of the week, we're seeing the market picking up some momentum here, which would be consistent with what I'm saying. Generally, when you're moving above RSI 50, you tend to close towards the highs of the session for whatever time frame the RSI 50 is taking place. So right now we are taking a look at the Nasdaq, and the Nasdaq is doing its best. It's down for the month, albeit about 17 points. So it could turn positive. And something else to consider, take a look at the RSI for the Nasdaq. It is exactly at 61.6. So very close to that 61.8 threshold. Of course, it doesn't have to be exact. So Nasdaq monthly doing its best to hold that 61.8 threshold-ish in that area, which would be consistent with this breakout here, if I can draw it this way. This breakout that begins this move, which also coincides with a price breakout in May of 2020. And boy, was that a big bullish sign right there when we saw that happen in 2020. Now, take that information and draw your uniformity line. Should be something like that. You can see that the Nasdaq could be building and holding support above this area, which would mean a market that is now poised for some sideways action and potentially in the coming months, break out to fresh all-time highs. And as I've stated, if the market and the Nasdaq and the general market turn negative for this month or in the coming months and break this area around RSI 61.8, then it would suggest that the next meaningful direction for the market would be down. For now, the indication is that more than likely we are in a market that is doing its best to stabilize, with the opportunity, if the market is truly going to go higher, for breakouts to be more profitable. Of course, we know that from sometime in 2021, breakouts have been iffy. A lot of them have failed, actually, to be honest. So we have to be careful here, but sometimes a market can reset, just like we saw the recent pullback, and after a reset, breakouts, especially new breakouts, can be the new leadership, and they tend to have the biggest gains if the market truly can move higher. Taking a look at the daily charts, we can see that the Dow is now trading between the 50-day moving average and the 200-day moving average. So we seem to be in a sideways situation for now, trading between those two moving averages. Also on the daily, let's not forget that the market still has to contend with this topside resistance line on the daily. In other words, I would speculate that we don't go higher until we can clear this topside resistance line on the daily. This is the Dow's daily. The S&P 500 daily also has a similar line, topside resistance line. Remember, as I was discussing midweek, we came to this level here, and I was saying that this could be a stall point on the daily, and we got that stall point over the last 2-3 days. So we can see that this is a line the market is aware of. If the S&P 500 is to move higher, it would need to clear this line to the upside on a day-to-day basis. Taking a look at the Nasdaq daily, we can see a similar line that should be a challenge. Nothing the market cannot clear above, but this line here, connecting recent highs, more so connecting to the highs that correspond to this area here. So this trend line is one that the market needs to clear, can clear, but before it can go higher, would need to take out this line to the upside. Now, the way it is taking shape, it would not surprise me that this is actually another instant of touching this line before another move down. So that's also a possibility that is potentially taking shape. But remember, the weekly is still stable. So remember, whenever there's a conflict between the big time frame and the small time frame, you give more weight to the big time frame, which is the weekly and the monthlies, if the monthlies can stay positive. If we take a look at the Vix Weekly, it is consistent with what we see in the general market. The VIX, if you draw a line around RSI 61.8, you can see that the VIX is constantly, over many years, has a tendency of reversing around this weekly RSI 61.8 threshold. This is uniform action above the line, back below it for that reversal area, and again uniform action reversal here. So unless the VIX can clear the recent weekly closing high, as I discussed last weekend, and that number is at 30.67, which is the recent weekly closing high from late November 2021. It would need to break out if the market is going to go down Right now, the VIX is looking like it has lost its momentum, which explains why the market net is positive over the last 2 weeks. So I would still set an alert for this number for the VIX, because if it can clear this level, it would suggest that the general market is set to spike downwards if this level can be taken out by the VIX. For now, this chart, in my opinion, looks like it is down to sideways as far as volatility is concerned, which means that the general market is gonna have the same look, which is what we've been saying here: sideways at the very worst, bullish at the very best for the general market. Taking a look at the Canadian market, and I know this is becoming overkill, probably tired of hearing this, but it is what the market is doing here. RSI 50, as I discussed over the last 2 weeks, the possibility that the Canadian market could use the RSI 50 for support has come into play perfectly. So as long as we're above that RSI 50, it suggests that now we are back to the possibility of testing recent highs, if not actually improving on those highs. Why? Because every time you have RSI 50 uniform activity support on the big time frames, it means a sideways to a higher market that generally tends to test prior highs, if not improve on them. Now, question becomes, what can change this stability to higher market analysis conclusion? Well, simple. We would have to break and stay below RSI 50 on the weekly for the Canadian market. Remember, on the monthly chart, the TSX is above 69.1 as of this month. In fact, it is newly moving back above that threshold of 69.1. So we can see that for sure momentum is starting to pick up back to the upside. And also we can say that this is a fresh breakout above December's monthly closing high. And that breakout level on the monthly for the Canadian market is right here, 21222.87, which is December's monthly closing high. As long as the TSX is above that number, this is a fresh breakout. At the same time, failure to hold above this number, now that it is above it, dropping back below that number would suggest a failed monthly breakout, which would also suggest that the RSI would be back below that 69.1 threshold. So I would watch that breakout level of 21222.84 to determine the overall strength of the Canadian market and global markets as a whole. Taking a look at the Nifty and staying with monthly charts, we can see the Nifty did pull back over the last couple of months. This is the monthly, 5-year monthly. But even with this pullback, take a look at your RSI for the Indian market. Still continues to hold above that threshold of RSI 69.1 and still could break out. So let me give you that number again. It's the same number, it hasn't changed. Going back to the monthly closing highs from late 2021 in October, and that price level that the Nifty would have to break out if it's gonna go higher, a level to watch for potential clearance and a momentum igniting breakout is 17671.65, again October's monthly closing high from last year. The monthly RSI is where we can see this very powerful look, a breakout with this power of RSI 69.1. Remember, the RSI has held above 69.1 all the way back to March of 2021, so close to 1 year. A breakout here could actually be very strong if it can break out successfully. Keep in mind, on the weekly, despite and in spite of all the volatility, we are still holding that RSI 50 on the Nifty, which means that as long as this is the case, then we are back to the scenario, as we've mentioned with other markets, of moving back to previous highs, testing previous highs, and potentially clearing those previous highs, recording improved new highs. Why? Because the RSI is holding. Now this is true as long as the RSI can build on this support. Then we are going to test the recent highs. A reversal around here back below 50 changes the landscape, changes the picture, and in that environment we would be setting the stage for a move down. So if we go by what we see and adding no more of our own thoughts, this has found support by itself, and so we have to respect and anticipate stability to a higher market for now until the facts on the ground change or the facts on the chart change. Gold continues to be where it's been trading in the range. Seems like we're going to talk about this for many months to come, or at least for now. Really, nothing has changed here. Stock just moves, or the index, the gold index, moves up and down, up and down. It's been doing this. Continues to be in the wedge. It's the same look, the same feel if you take a look at GDX. So that's the situation. No need to add more. Seems like we are sideways and remain sideways, have been sideways for many months as far as gold is concerned, and the miners. Of course, the monthly charts, as I've been stating, are closer to 3-year lows. So we have to anticipate possibility of breaking at some point, but now it continues to be sideways. And as I've been showing you guys, this wedge would have to break one way or the other to ignite either a move down by moving below the wedge, or to ignite some excitement if gold can clear this topside resistance line on its weekly RSI. This week, we saw the energy ETF XLE blast into the 69.1 threshold. Actually, might be the second week. At any rate, it is above 69.1. And so we have to give the benefit of the doubt for higher prices and be open to be surprised by higher and higher prices. So that's an area of strength. XLE doing its best to continue with its strong uptrend over the last, let's call it, couple of months. In fact, if you take a look at the monthly, it is now above that threshold of RSI 69.1. So personally, I know that means that you have to play the upside, ask questions on a later date. As long as the RSI is above 69.1, you assume that the momentum is true and to the upside. Now, this in the face of what I've been showing you over many years, which is where it has been stalling almost without fail. So this is where over many years this line has been guidance right here. But you can see we've now cleared that line for the first time for sure since this break here in 2014. And so now the possibility of higher prices is there as long as your RSI is above 69.1. Now, if we end up in the coming months reversing back below 69.1, then this could be a topping situation with the next trend being down. But understand that as long as the RSI is above 69.1, you have to give the benefit of the doubt to the bullish outcome. I want to add something here, which is the topside line, which could end up being an issue going forward. It's a simple line connecting RSI highs. I can just draw a search, or you can even draw it this way. Connecting the highs right there. You can see that we are ending up with exactly where we are trading. Let me check out all that other line so we can draw it this way, or even to connect these highs here. So you can see there's a possibility it is coming back to test the top side line. So for now, you can play the momentum to the upside because the RSI is above 69.1, understanding very well that if you see this reverse and if the RSI is back below 69.1, either with a rejection, maybe it doesn't close above this threshold by the end of the month, or it reverses back below 69.1 with uniform action, be on the lookout for a potential multi-month reversal. Taking a look at USO, which is another way of taking a look at crude oil. So crude oil, but here we're using USO. We can see that USO on the weekly also has moved above that 69.1 threshold. Hence, we can see why momentum is picking up. So for sure, this is why I'm also giving you some of those breakouts in the energy space, because I can see the possibility, especially with the XLF clearing the monthly levels, that there's a possibility that this continues higher. So we have to respect the possibility of a move higher, but also be advised. Oh, by the way, should I end up releasing this video to the general public? For those of you who are not paid clients to Mwathe.com, and if you are interested in getting every weekend market analysis video and you are interested in midweek analysis, depending on what I find and what I see midweek, then consider joining my paid client list. Otherwise, this is a sample of what I do for clients during the end of the week as we summarize and anticipate future market possibility and directions. So yeah, consider becoming a client should you be inclined to do so. No pressure. All right, so on the monthly chart for USO, you can see here that this could also be a trap. In fact, if we go back to this break of 2014, we've used this in the years gone by. In fact, I remember very well. Those of you who've been clients for a while can remember this period, which was a trap zone, and we could see that happening based on this break point. We've come close to this blue line based on my uniformity concept. All these highs, we were able to see them at the time. And now I'm still saying, suggesting, pointing out, highlighting that this can actually be another instance of a trap before going down. But I'll simplify it. As long as the XLE is above 69.1, we have to give the benefit of the doubt to higher prices. If the XLE cannot hold 69.1, then this USO or crude oil is going to stall around here, and we are going to realize in the coming months that this move in energy was a trap before the true move that is going to be downwards if RSI 69.1 is rejected, and if this blue line on the monthly chart for USO turns into resistance. So of course we'll continue monitoring this line here, but to me, I would not be surprised that this is still a trap. We shall see. Which, by the way, with about 15 minutes to go, we've seen the markets coming off the highs. Let's take a look at BTC for sure. Trading up about 8-9%. Ethereum was up about 10% in this session. So markets coming off the highs here, and I'm going to use BTC's 4-hourly chart. BTC coming off the high at 40,960, currently trading at 4523. If we take a look at the 4-hourly chart for Bitcoin, take a look at this line that I've drawn in previous analysis for BTC. If this line happens to be slightly above RSI 61.8, we can see on this 4-hourly there is a little bit of a reversal there by the cryptos also, which, by the way, as I've been saying for many months, if not years, they just follow the general market. The cryptos are an extension of the market, a subset of the market, a sector of the market. They are not trading in their own vacuum. This is where we broke off in the 68,000 on this 4-hourly chart, and since then this has been resistance for the cryptos, and guess what, here we are again. So if this is confirmed as resistance, if there's no more energy left, in the short term and we start drifting lower, then of course the next meaningful direction from here is down. If the cryptos are to move higher, they too need to clear this short-term resistance line on the 4-hourly for Bitcoin. By the way, from a generic standpoint, let's not forget that even on this daily chart for Bitcoin, we still have a very sharply declining 50-day moving average. So there's a lot of work that this needs to do before it can turn this 50-day moving average higher. So 50-day moving average still pointing down. Look here, it had to turn this ship higher. It took some energy. So we can say that if you use the 50-day as an entry here, then you'd want to wait for a move above this declining 50-day moving average. In other words, BTC still, even with this nice move today, this Friday, has some work to do. Now I want to show another line on the daily, which is this line connecting the lows here and here. I'm going to extend that line. And there you have it. Something like that. Again, connecting the lows here and here and here. If you squint, you'll see that this red line has been a play area of persistent and consistent resistance by Bitcoin. Here we went above it, back below it with uniform action. In other words, let me explain that. A line, this is the red line, and this behavior right here was the blue line represents RSI 50. Hope you're following along. So RSI 50 is the blue line. We went above it. Something like that. So we got a lot of things going on here. We got that double top rejection at the RSI 50. We have uniform activity above the red line back below it for that reversal area, which is here, which corresponds with this reversal here. And now we are here. One of the reasons why we are having a good day in the cryptos is because we are moving above RSI 50 on the daily for BTC and for Ethereum. Now, which means, should they stall over the weekend or early next week back below RSI 50, expect a big down day. Now, those who are clients and have been following week to week my analysis, you are aware that this could have been an area for potential support on Bitcoin. And guess what? It bounced magically, if not predictably, on this line. So we talked about this over the last 2-3 weeks. And guess what? The market is responding to it. Why was that line drawn? Well, it's based on my concept, which I call the uniformity concept. As long as BTC is above this threshold, it could build eventually going higher. It's going to take a break of this line now. This is the new sell point. If it can eventually break that line, that's a serious break. Lower prices would be experienced. Keep in mind that blue line happens to be around that, yep, you guessed it, 38.2 threshold. Now, clients are also aware that I've been talking about this RSI lows line on the monthly. I've talked about this month to month being possibly where BTC finds support, which is what is taking place right now. It also happens to be around and above that RSI 50 threshold. So month to month, and it's a biggie. As long as we are holding and building above this line, then we are looking at a crypto market set to be sideways to higher. If the cryptos are going to break down below this area, recent trading low ranges, if they're going to break this threshold in price, it's going to be visually well recognizable because it's going to take a break of this well-defined RSI lows line on the monthly. So if you're interested in staying up to date with my analysis moment by moment, you know what to do. All right, I'm going to stop right there. And so it is. With about 3 minutes to go before the end of the week, end of the session this Friday, there is your markets coming off the highs of the session. And you can take a look at the charts that I furnish to see where this short-term resistance has come towards the end of this Friday session, and take a look at snapshot at where BTC is trading, coming off its highs, also trading at 40,571-ish. This is Eric with Mother.com. I leave you, beloveds, as I found you, in the love and in the light of the one infinite Creator. Go forth, therefore, rejoicing in the power and in the peace of the one Creator. Adonai.